Joining us now to discuss BTC price and more is Tom Dunleavy. He's a senior cryptocurrency research analyst at crypto data firm Messari. Tom, great to have you this afternoon. So maybe you could talk about some of the catalysts that might be behind Bitcoin's recent surge this year.
Sure. Yeah. And thanks for having me. So I'll start with the continued liquidity in the system. We have QT sort of going on in the background, but a lot of that is sort of stemmed by the drawdown of the TGA as we get debt ceiling debates. That's going to really put a lid on those QT effects. So we're going to continue to see positive liquidity effects until that sort of debt debate is that runs its course. You've also seen a lot of forced sellers and leverage flush from the system. We have a lot of allocators who need to now put money to work as it's the start of a new year. Those are allocators who are crypto specific. So if you run a crypto hedge fund, you have to put money in crypto. You have to start putting money to work in the start of the year. That problem only gets worse once Bitcoin and Ethereum start to run away from you. They're your benchmark and you can't fall behind. So you've seen a lot of those people put money to work right away. I think the traditional allocator also is attracted by this environment with bond yields so high because you can get 5% in one portion of your portfolio and then start to leg out and consider Bitcoin and Ethereum on the riskier and start adding positions there, knowing you have the ballast of a nice bond yield on the other side of your portfolio as well. So a number of things there that really contributed to it.
Tom, wondering what you can say about miners. So we're seeing shares of Bitcoin miner Argo blockchain rising after the company gained listing compliance with the NASDAQ thanks to a late December deal with Galaxy Digital to avoid bankruptcy and recent rise in the price of Bitcoin. So can we anticipate a better year for miners in 2023?
Can't be worse than last year, right? Bitcoin miners last year net sold all of the Bitcoin they mined and they still had a lot of trouble. So higher prices are certainly something that these miners are looking forward to. The businesses are very cyclical and, it only continues to get tougher. But as competition is reduced across the space, miners, continue to have sort of opportunities to progress forward and to take advantage of those higher prices in the future. So I don't know if I'm investor at miners at these levels, but the days ahead certainly look brighter than they did at the end of last year.
All right, so you're taking a closer look at crypto portfolio management. What are some of the key takeaways you have?
Yeah, so we took a look at how crypto performs in a traditional 60-40 portfolio. So if you're an allocator, you're thinking 60% stocks, 40% bonds. This has worked really well over time. Why do I need Bitcoin and Ethereum? So if you actually add Bitcoin and Ethereum in very small amounts to those standard portfolios, you've seen outsized not only absolute returns, but risk-adjusted returns. This data set here you're looking at is since 2018. That strips out a lot of the volatility and a lot of the high price, exponential price rises you got in the beginning of the data series. If you remember back in the beginning of 2018, Bitcoin was around 14,000, Ethereum was around 800, not too far from the levels we've seen today. And you've still seen a lot of benefit to a broader portfolio. And that's because you get a little bit of correlation, sort of Bitcoin and Ethereum are highly correlated, but not perfectly correlated to those assets. You get the higher return profile, and it has been additive to your portfolio. We extended this analysis and actually looking at an optimal portfolio, you get sort of a Bitcoin and Ethereum kind of barbell, a lot of bonds, a lot of Ethereum, kind of what I alluded to earlier. So, I think an interesting analysis that hopefully should be, nice for traditional allocators to consume.
And what are we seeing here? What I understand is that, if you're BTC and ETH heavy, not necessarily better than spreading out among other coins.
A lot of the benchmarks you see today are 95% Bitcoin and Ethereum. They charge very high fees for that. So what we tried to do here is try to find what the actual optimal portfolio was since 2018. We didn't use the sort of traditional risk-adjusted metric, the Sharpe ratio, because that penalizes you for upside volatility, which we have a lot of in crypto. We used another ratio called the Sortino ratio, which only looks at downside volatility. And we optimize across the range of crypto assets. And what I think is interesting here for investors is the optimal portfolio is actually sort of equally weighted across the board, which alludes to a lot of the portfolios that I think venture investors build today. And because of the upside of the asset class, you don't really know where it's coming from. So you want to spread your bets across the board and take a lot of chances, put a lot of shots on goal to potentially capture that upside. We went further in the paper to discuss rebalancing, but you would want to rebalance less as well. So equally weighted, rebalance maybe annually or so, and you could look to capture a lot of the upside opportunities the asset class has to offer.
So what are you looking at? You're saying to go beyond Bitcoin and Ethereum and dive into what?
So I think for someone who's actually going to run this portfolio at home, it would be something like I would market weight Bitcoin and Ethereum, and then based on my conviction on a number of different markets, emerging trends, I would put those tokens in an equal weight in the other percentage of my portfolio, because I likely do not know what's going to be the outsized, return. It could be Axie Infinity, it could be, Rune, it could be Arweave, but, putting a number of these tokens across the board and spreading your bets is something that's important. I think particularly for allocators who are doing this on a daily basis, that's a little bit easier of a challenge. But hopefully as this sort of research filters more through the industry, we'll build benchmarks around these sort of concepts, and traditional investors could just buy the basket rather than actually have to worry about doing it themselves.
We have a varied assortment of CoinDesk indexes here. Tom, thank you so much. That was Messari, Senior Cryptocurrency Research Analyst at Messari.